Welcome everyone. Today we are going to cover part 2 of the week 8. Week 8 we covered previously goods and services tax. The second part of the week 8, the PAYG withholding. So we will cover PAYG today, and we will move in cover some other taxes such as fuel tax credits and luxury car tax and French benefit tax. And then we will talk about that salary sacrifice as well. Excellent. So we will start with that PAYG withholding. Give me a 2 second. I want to move this slide to that exactly where it is. PAYG withholding. I think slides to couple of slides. We want to move from here. Here it is. PAYG. Pay as you go. PAYG is a single integrated system for reporting withholding amounts on tax for individuals and business income, very especially. PAYG, there are two parts of the PAYG. PAYG withholding, PAYG installment. Normally we use that label PAYG W for the withholding and PAYG I for the installment. PAYG withholding mean we are paying our expected income tax liability in advance while working as an employee, right? The normal rule. Not only employee, that especially major part of the PAYG withholding fall under employees. So if the business taking tax from another person and give it to ATO, that's normally called PAYG withholding. If the business paying their income tax in advance, that's called PAYG installments. Technically, PAYG withholding is a advanced tax payment system for employees and businesses and investment income. So when you earn income as an employee, so for an example, your gross wage is $1,000, and what's going to happen? So whatever tax component, for example, $200 tax component, employer take it out from your salary and send it to ATO. The net amount you are going to get only $800, right? For an example. So how that's called PAYG withholding system. Employer taking that your tax component, your advanced tax component, while he's paying the salary or wages or commission or whatever that remuneration, he take it out and send it to ATO. That's called PAYG withholding. So end of the year, when you lodge that your income tax return, so what happened? This amount what the employer deducted from your salary, it's going as a PAYG credit. If you go to that in your zero practice manager, you can see in the estimate section there's a PAYG credit. So for an example, in your total tax $30,000, right? Your total tax $30,000, and your normal contribution, you if you already paid PAYG credit $25,000, you're required to pay only 5,000. That's called PAYG withholding credit. So you can see, go to that your zero practice manager and search in that what you call the section under the estimate, and you can see. I will just show you now where it is. It's easy for you to understand. I will log into that our zero practice managers. That's easy for you. And we want a little code. Uh, 860. Right. So everyone, I assume that you all can see that our zero practice manager. If you go to the tax side, and you can see, I'll go open one of the tax return, and if you go estimate section, you can see here PAYG credit. So if you paid through that your employment, it will be here. If you paid through the business, it will be there. So when we have that when we pay this PAYG withholding or PAYG installment, both will be goes against our income tax return as a PAYG credit. right? The PAYG credit. Then ATO will calculate and say how much taxable payable, how much paid, different between two in your income tax outcomes, right? And PAYG withholding, what I am going to cover in this class or in this workshop, I will divide into four different category, which is payment to employees, right? Other one, the payments under the voluntary agreement. Other one, payments where ABN has not quoted transactions, right? And investment income related PAYG. So we will look into that, all these four different type of PAYG system, how we going to calculate, how we going to report in the BAS. So there are a little bit bookkeeping involved with that one here, as well as we will going to see how we going to report in the BAS. That's the main part of that my focus. However, while we are doing, we will understand how is the normal bookkeeping, because you may work as a bookkeeper as well. Start with the payment of employees. So that business paying to that employees, you can make it the four groups. One, payment to that remuneration. That may be a different terminology we use: salary, wages, commission, bonus, right? Overtime, car allowance, travel allowance, all these allowances and payments we call remuneration in the tax. Second part, the reimbursement. The employee spent some money on that business, that money was reimbursed. Third one we call Frenchy benefit, right? Some additional benefit provided outside of tax system, right? Outside of PAYG withholding tax system. That's normally we call Frenchy benefit. Other one, superannuation contribution, right? So when you provide to your employee, if it is a superannuation or Frenchy benefit or reimbursement, rest of that items normally fall under payment to employees. You may call different names or different acronym or different terminology that fall under payment to employees. So payment to employees for the work, what they call, what the or service they rendered, come under PAYG withholding system. You required to withhold the tax. So no matter what the terminology used, overtime or bonus or commission, still you're going to deduct that particular PAYG withholding component and send it to ATO. Only you can pay net pay to that employees. Right. So I put that couple of examples for you, but it's not restricted to this list. So anything not paid for the reimbursement or fringe benefit or superannuation normally fall under payment to employees. You require to pay that. You require to withhold a tax component. Now, second question is how much I am going to withhold. When I talk about the example, $1,000 and $200 randomly, and a couple of times I indicate, for an example. So how much actually we going to withhold? What is the source documents? That's called tax tables, right? There are two ways you can do tax tables and tax calculator. So I will just first explain to you tax table, then we will move into tax calculator. If you will just go and open the tax table. If you go to ATO website, if you click this link, you will get it at tax table, right? So I will just go to explain. All right, so give me a minute. New share. Right. So you can see here tax table, right? So I will go back. This is the link, you will get it. There are a number of different tax tables available here, but you are going to use the regular payments. Regular payments mean payment to employees, right? This payment normally how you pay every fortnight or every week or every month or daily. So each different setup pay cycle, what you are going to work with that your employee or your workers, you have the table. If you're paying fortnights wages, you're going to use the fortnight tax table. If you're using weekly table, weekly. So that's a one part. And second, two tables we're going to use, I will explain here in the same time. When we go to that in the down, there will be a study loan repayment. You may remember we talk about that help loan or different loans tax office provided to that taxpayer for their high studies, such as university or diploma or advanced diploma studies. When they completed that, when they get that type of loan that want to be repay, that repayment loan amount can be calculated here. That's we normally call PAYG withholding help, but actually a PAYG withholding repayment of loan, right? If you are paying your salary for your employees weekly, you can use this table. If you're fortnight, this table, monthly, this table. Please note that this table only going to give you repayment of the loan component, right? Repayment of the study loan component, but the actual tax will be stay under the regular payments, right? Under the regular payments. So you can see regular payments. So we will see. For example, I assume that your company or your business paying every week salary for your employees. So we will click the weekly timetable, weekly um, table. You can see there's a one Excel version and the PDF version in the bottom. So I will prefer to open the PDF version and share with you. Excuse me. So you can see the weekly table, tax table. So there are three columns in the weekly tax table. One called weekly earnings. Second and third column that involved with that, how much tax you going to withhold from that salary and send it to ATO, right? But how much you going withhold, there are two options. One called with tax-free threshold, other one no tax-free threshold. You may remember we talk about that first 18,200, you no need to pay the tax. So if you want to climb that tax-free threshold, you can climb through your tax file declaration, right? When you click that in your tax file declaration, that I would like to climb tax-free threshold, you will pay second column. If you say no, I am not climbing tax-free threshold, your column will be 3. So the first column will be in your cross wages for the cross earning, right? So that may be a salary or wages or commission. Assume that salary, right? 30 hours you are working, $20 per hour. So $600 your cross wages. So we will move into 600, say 600. How much that $600? If you climb tax-free threshold, $58. If you're not climbing tax-free threshold, $145, right? So you are climbing tax-free threshold or not, depend on what is your tax file declaration. So we will go back to the tax file declaration and work it out. So you can download this form, tax file declaration. And if you go here, the tax file declaration normally with the accountants, because we are the people managing their taxes. So you can see, put the tax file number declaration here. When you finish it, that one. So without tax file number also you can do the tax file declaration. Can you see? O. So sometime accountant sending back to the employee saying that, hey, you have no tax file number. I cannot take the TFN declaration. No, we cannot. We don't need to say like that, because very clearly say if you are already applied to the tax file a number, or if you already you have the number but you forget that one, in that case you can click this one. Also, there are 3 options you have without tax file number to do the tax file declaration. Now we will come back to the other questions are very straightforward, name and etc. We will come back to the other important one. Are you Australian resident or non-resident? You remember that when we talk about the residency and non-residency, we have did the 4 tests. What are the 4 tests? We talk about the prime residence test. We talk about the domicile test and 183 days test and superannuation test. If they pass any one of the tests, they're going to be an Australian resident for the tax purpose. Otherwise, foreign resident. You can see a 3 in the new items come up here. That's called a holiday worker maker. So the working holiday may come in, they be called backpackers in the normal terminology. So that two different visa category 441 and 442, if they come over here and work, they must click here because they have a separate tax table and separate tax rate. So there will be normal rate up to 37,000, 15 percentage, then normally ordinary tax rate. So therefore, that if they are holiday maker or backpacker, you're going to click in that holiday maker visa category, right? That residency category for the tax purpose, because tax rate is different. I will cover this one later in the down the track with the XPM. Next question, as we ask, are you going to climb threshold or not? If you are foreign resident or holiday maker, you cannot climb. Only the Australian resident can climb. And if you climb, yes, that you are going to use in our table column 2. If you say no, you're going to climb column 3 because you are not climbing. So normally we call in your first job will be you can climb, second jobs you cannot. But the normal rule is if you are annual total yearly income less than 18,200, you can climb. For example, you have two jobs, $5,000, you can climb both jobs because in your total income in that year less than 18,200. So that's the benchmark you want to think. That normal rule you want to climb only from the first job. However, first job is $5,000, second job is $100,000. What you can do, you can ask to that employee to that climb from the higher income job and go back to and not climb from the second small income job. Can change the tax file declaration during the year because this is the advanced system. 10 about your study loan. As I said that there are different study loans provided by tax file number and they call different names in the years. Last 25 years is a different names. You can see help, well, VSL, FS, right, SSL, TSL, all are study loan, the different terminology used in the different period of time or different purpose that loan was provided. If you have a loan, when you go to where the client can go to the MyGov and click the loan section, it will show how much they want to pay. Or if he's our client, we can go to the tax agent portal and click that loan accounts. It will show how much they want to pay. If they not click here, PAYG withholding repayment, that the loan repayment will be not calculated in the pay slip, in the weekly pay, and client maybe end up with a big tax bill end of the year when they lodge the tax return. So this very important. If they know, they have no study loan. If they yes, they have the study loan. When you click this one, automatically calculate in your payroll how much PAYG withholding loan repayment for study, right? We call PAYG withholding help. Now we'll go back to that in our uh, original weekly table to see that couple of example. As I said, $600. You can see when we move into here, $362. How much it is? $361 after only starting this little tax-free threshold up to $360 per week. You don't need to pay anything. What is the reason? If you multiple by 361 by 52 weeks, it will come around over 18,200. So up to 18,200, you are not going to pay the tax. That's the reason. $361. That's the mark starting from the tax. So up to this point, you are not paying to the tax. But if you are not climbing threshold, you are saying that I don't want to that threshold because of the different reason, that will be here, right? So this call in our weekly tax table. I will go back to that in our original screen, which is in our PowerPoint, and we will see rest of the stuff. Excellent. So as we already discussed, if you are not TFN coded, 47 percentage or 45 for non-resident, regular payment, three columns only. We are going to use one for the TFN quoted ones. First column, second column, third column. I explain one example. Now we will go to the voluntary agreement. What is a voluntary agreement? Usually, you do not withhold the amounts payment you make to the contractors or businesses. Normally, how is that work? Business to business transactions are you provide that invoice, I will pay in full. That's all. For example, I'm a bookkeeping business. You are doing a cleaning business for my bookkeeping business. You gave me $100 invoice. I pay full in $100. Done. So that's the way business to business transaction. However, if you are a sole trader, if you are an individual and with the ABN number, if you want to come under PAYG withholding system, pay your tax through your invoice, right? Pay your tax from your invoice. So that's called voluntary agreements. Who can do this one? So who should have a ABN and he should have individual person. Companies cannot do this one. So individual person only can do. So the voluntary agreement mean a business only can do if you providing predominantly say labor services. For example, a bookkeeper, a cleaner, or carpenter, or electrician, or plumber. When they're providing predominantly their services, labor services, they can sign a voluntary agreement. So when they sign the voluntary agreement, you will come under PAYG withholding system. Then we voluntary agreement form you can download from the DTO, and both party when they signed that the new contractor or new that the business providing the service to us, we will consider them as a PAYG withholding system. It's mean when they complete their service and provide, for example, $1,000 invoice, you're going to withhold a amount and send it to ATO that amount against their ABN number, and only you're going to pay to that contractor the balance amount. For so now question is how much I am going to withhold. We cannot use the table what we used that previously. That's a regular payment table. So how much we going to withhold? Total invoice amount times CIR. We call commissioner installment rate, CIR. So how we knows that CIR? You should ask from the ATO what is the CIR for that particular ABN. Each ABN may have unique CIR. It's not necessary everyone have a same CIR. CIR calculated based on that previous year tax return. So therefore, most of the day that most of these ABN holders have different CIR. If ATO say what is the CIR, you multiple by that one and send it to ATO. If some new businesses, they ATO may say, sorry, we have no CIR for this business. In that case, you should use flat rate of 20%. So you have two options. The first option is you must go to the CIR based on the ATO's advice, and if it is not available that CIR, we can use the flat rate of 20%, right? So that, for example, now after signing the voluntary agreement, if that businesses come and give the $1,000 invoice, assume that 27.5 CIR, you are going to withhold $275 and you report that amount through the BAS. If that CIR is not available for a new businesses, you will withhold flat rate of 20% and send it to ATO $200. You're going to balance $800. You can ask what is the benefit to this business to going through this system. They're paying their tax in advance, right? They no need to do their own PAYG installment. They can do through the other businesses. That's the benefit to that the contractor who signed the voluntary agreement. Other business, they have more work, not any benefit. Sorry, excuse me. So PAYG withholding, ABN not quoted. Um, uh, PAYG payments where ABN not quoted in relation to supply. If it's a, give me a 2 second, guys. I will have a water. Right. So that's business to business transaction required ABN any amount more than $75. So if anything more than $75, the business getting that invoice or tax invoice, sorry, invoice without ABN number. So in that case, other party should be withhold 47 percentage of the tax invoice. For example, I have a bookkeeping business, I have a cleaning business, you have a bookkeeping business. I come and do some cleaning work for you and giving to you $1,000 invoice. You asked what is the ABN number. I said, sorry, I did not register for ABN, or I did not register ABN holder. So what is that? Your responsibility. Withhold $470 and send it to ATO. That's through the BAS PAYG withholding. So we talk about that now. Three different type of PAYG withholding. One, payment to employees. Second, we talk about the voluntary agreement. Third, we are talking about here PAYG ABN not quoted. So whoever not quoted ABN, business to business transaction over $70, 47 percentage should be withhold and send it to ATO through your BAS or installment activity statement. Right, payment no need to. Payment under 75, this rule will not applicable. Supplies not a business transaction. For example, somebody come and do some work at your home. They are giving the invoice without ABN. You cannot do anything. Entire payment is exempt from supplier. For example, a non-profit organization, supplier not carrying on an enterprise, right? So they are doing for their own shake, and other conditions are also there. But the normal rule, if they are not providing that ABN over $75, you're going to withhold 47 percentage and send it to ATO through your BAS. Now, last one, withholding, interest, dividends, and royalties. Anything withholding in that one, and 47 percentage is required investment income for which investor will not. For example, the bank. So you have the bank saving account. If you not provide that your TFN, what bank going to do? Take it 47 percentage, and balance interest only will come to you. So that's any kind of interest or dividend or royalties PAYG, so withholding, you can include in the BAS. Right, it is not much important. You're not going to much involved with this one in that in our a workshop or in the day-to-day bookkeeping work. So I just skip this one. Working holiday makers. As I said, working holiday makers are, there are two work class, 5417 and 462. My apology, I think I said that wrong part. Visa numbers in initially 417 and 462. If they have this type of visa holders, they normally call holiday makers. Their tax rate is different, and so we want to see how much. For example, if they work in the registered employers, they will be charged only up to 37 percentage, 37,000, 15 percentage, and then they will be charged in the ordinary hours. If they're working non-registered employers, normal foreign resident tax rate will be charged, but some of the working holiday holders, they trying to get that resident tax rate as well. So that's depend on that if they pass the test or not. Now I will go back to the XPM, and I will explain how we are going to handle this one in our XPM, because the holiday makers one of the important different from that normal one. So if we go to here, I will when you enter that your salary and wages information about the holiday makers, right? And I'll put it that one. Right, save that new. Okay. So you can see, I will back to here. You can see here, um, is that income. I want to put some income, my apology. All right, can you see here? That's this column is empty. That's in your salaries and wages column empty. Normally, if you are resident or non-resident, this is not going to be anything. But if you are a holiday maker, you're going to click H, right? If it's a holiday maker, you're going to click H, right? So when you click the H, so then when you save, it will not allow you to save. because you must provide some more information. Click on that income test and go to that in your A4. You won't include how much holidaymakers gross income, how much deductions. Then that normal tax rate will be applicable. So now I will come back to that our original screen. You can see that working holiday makers, there are two sub visa classes, right? There, if they're working under a registered employer, their tax rate will be first 37,000 15%, then normal tax rate. But if you work in a non-registered employer, you will be treated resident or non-resident based on that if you pass the test or not, right? So normally that working holiday, the backpackers are considered as a non-resident for the tax purpose, non-resident for the tax purpose. However, now there are a number of court cases going on to consider them as a resident for the tax purpose. So we will wait and see what are the results coming out from that. If you go to ATO website, you can see the group of countries backpackers, they have filed a case against tax office. Right, so that's a PAYG withholding. So now we will move into, I will make sure that you guys can see that. All right, the payment summary. So what is the payment summary? End of the financial year or end of the tax year, employer should give a summary of their payments, what they actually paid, how much the tax they withhold and send it to ATO. So a couple of years before, when we are doing the tax return, we are rely on this payment summary to enter this information in our system, right? How much that paid to the financial year, total cross wages and all the income cross amount, how much tax withhold from those payments, right? So in addition to that, some other information also will be there, like a reportable fringe benefit, reportable super contribution allowances, union fees, and etc. So very importantly, that this document is used to prepare the tax return and the employment income. So, however, that nowadays this particular payment summary is reported through the single touch payroll system. Single touch payroll system, which is normally when you click finalize the payment summary, a copy of the payment summary will go to the employees MyGov account, and same time it will be updated in the ATO system. As a tax agent, we can download in that information through the in our portal, or we can go to the tax agent portal and get the PDF version of the payment summary. Most of the time we are not going to take it out. So what we will do, if you go to that your XPM already linked with the client, go to that, click, can you see that XPM? Yeah. So click on that PLS, online PLS. When you click this button, it's automatically download under the income section. So you no need to type anything. For this case, no, we disable this facility at this point for you guys. But when you started to work, you can click and get it. So that's called your payment summary. The payment summary will be provide all the information required. So you can see there are reportable fringe benefit and reportable super contribution. The reason is this one here, to calculate your Medicare levy surcharge or calculate your repayment of help loan. These informations are required, or adjustable income is required. So that will be go to that in your income test section automatically. You no need to retype again. So then I will come back to that my slides. PAYG health withholding help, as I explained previously, you want to repay the loan, but very importantly, there's a repayment threshold. If your total repayment income less than 45,881 this year, 1920, it will be changed every year. If your repayment income less than this amount, you no need to pay that this PAYG withholding component. So if it's above that 45,881, you started to pay. So you can click on the link here and see what the repayment income, which is not only just income, it's include taxable income, reportable fringe benefit, reportable super contribution, report in your net investment loss and net financial loss. So such as all the stuff should be included to calculate that 45,881. Right? So if your income less than that amount, if your employee's income less than that amount, we are not going to take it out that PAYG withholding help. But if they exceed from 45,881, they're required to pay. Right? That's called PAYG withholding. How much you're going to know? The same as go to the tax table and work it out. So one of the things I did not explain, my apology from that PAYG withholding, you use that your the PDF table and work it out the tax. However, there are one of the other facilities also ATO provide us, right? That's called the integrated quick search. You need to that use the PDF in the real world. For example, use check here. This is a weekly table. It will show you how much. Right. If you want to that fortnight, you want to download fortnight Excel worksheet, and you can type that how much fortnight you are paying. It will show you both column. So this will be available. So when we are normally most of our accounting systems are linked with that payroll PAYG withholding tables automatically update in the accounting system. So you no need to search these numbers in real world, right? However, sometimes system have some issue. You can go back to download this Excel worksheet and type that what are the cross wages and see how much that the taxes calculated as per ATO guidelines, right? So that's the only time we're going to use this table. Otherwise, the MyOppo Xero or QuickBook will automatically calculate every year or any updated table automatically update in that particular accounting softwares. So therefore, we no need to remember, or we know we are not going to use only the circumstances we use when we are using the tables. So you can see PAYG withholding. We can there are two part regular PAYG withholding and PAYG withholding help mean that payment repayment of loan. Sometimes people confusing PAYG is a loan wise coming as a tax. So because that loan is provided by ATO managing that loan, so therefore that's part of that one. But your actual tax component is regular PAYG withholding in your help is a repayment of your loan, your employee's loan or your client loan, right? Now, how we going to report the PAYG withholding? We are reporting through the BAS or we are reporting through the installment activity statement. If you are reporting with GST, that's called business activity statement. If you are reporting without GST, that's called um, installment activity statement, right? So there are two ways you're going to report. How frequently you report, it is depend on the your total PAYG amount you are collecting from your employees. If your total PAYG amount less than 25,000, what you are collecting from employee in a year, you can report every 3 months. That's called small withholder 3 months reporting. If you are total PAYG withholding you collected from that your employees more than $25,000 and less than 1 million, you go into annual your monthly reporting. Every month you're going to report. If your total PAYG withholding exceed 1 million, you like a large withholder called so Woolworth, they're going to report and pay every fortnight twice a week, right? Twice a weekly reporting because of the significant amount. Whereas you know why it is? This PAYG withholding amount belongs to ATO, not belongs to businesses. We all belongs to employees. We taking out and paying to employees, tax office. What is it labels? You can see now we'll come back to the PAYG withholding, how you're going to complete in your BAS or installment activity statements. So I just screenshotted what is the section of the PAYG withholding. You can see W1, W2, W3, W4, W3, and W5. The W1 is not a tax component. You are going to show what is the total wages and other payments you made to your employees, right? So whatever salary, commission, right, overtime, whatever amounts we pay to the total cross amount will go to W1, right? So any tax you withhold for the W1 payment, it will fall under W2. So very simple. You remember we talk about the payment to employees, payment to employees W1, right? So anything you come under the payment to employee system, if you deduct that or if you withhold any tax, that fall under W2. The voluntary agreement tax component also fall under W2. Remember we talk about the voluntary agreement, the little tax component, that's also fall under W2. So the W1, whatever W2, whatever amount you saw in W1, that if you withhold any tax, that will come to that W2. W4, you remember we talk about that something ABN not quoted transaction over 75 between businesses, that 47 percentage you withhold, that 47 percentage amount only going to report in the W4 because that's a tax component. The total invoice amount anyway are not reported in BAS. Very clear, right? So W3, we remember we talk about the interest and royalties and dividends times. So any PAYG withholding we withhold without over that somebody not paying that somebody not uh, uh, declare their tax file number to that investment institutions or bank institutions, that will come to the W3. Very rare you are using W3. Most of the time you are going to include W2 and W4. So in your total tax withholding, you want to say to ATO, W2, W4, and W3, that will come to W5. You're going to transfer that one to summary section. If you go to a BAS form, PAYG withholding number 4. That's the amount you want to pay back to ATO. Right? So this is the way we are going to complete in our BAS form. Right? I put it everything what I discuss here. PAYG installment, other interesting section, the PAYG installment, a system making regular payment towards your business income. There are two options you can have. One option installment amount, other one called installment rate. Installment amount or installment rate, there are two options for the businesses. However, if your business is a company more than 10 million, or if you are a super fund more than 2 million, you must select it for option 2. Company more than 10 million or superannuation more than 2 million to annual turnover, they must select an option 2. Others, they can choose whatever method they preferred. So now option 1 mean tax office going to calculate and give to us to pay. So you don't need to any work. Option 2 mean tax office going to give you the installment rate. You're going to calculate your installment income and then you multiple by one to other and get that installment amount and you are going to pay. Right? So you have little freedom using the installment rate. So that how tax office calculate our installment amount based on the previous year tax return. How tax office calculate our installment rate based on the previous year tax rate, your tax lodgement. So option 1, you can see T7 tax office going to provide that information. You're going to include. Option 2, tax office is going to give you T2, how much that your installment rate. You calculate the PAYG installment. You multiple T1 by T2 and include in the T11 and pay to ATO. Sometime how that so we will go back to the option 1, how that ATO calculate the T7 based on the last year. For example, we will say last year your total tax $50,000. ATO will divide by 4. Every 3 months they will say you want to pay 12,500. Right? So we are paying if we are everything going same as last year. Sometime, for example, COVID, businesses lost now. So they are not going to agree in my tax advance same as last year. Therefore, you can change it. That's called variation of PAYG installment. If you want to change that ATO's estimate in the T7, what you can do, you can go to your XPM and calculate the estimated tax for that particular year and this year, and include that one in the T8, and you're going to readjust now T9. For an example, if you write down in your notebook $50,000 last financial year um, tax return. So it you asked you to pay 12,500 each quarter. You already paid 2 quarters, $25,000, and third quarter you are in. But now in the COVID, you understand our business going to be tax loss. Tax loss. So what's going to happen? Estimated tax T8 0. So T9 will be 0 because you are not going to pay anything this year. Even if you want, you can climb back what you paid to that past 2 years one and go to the 5B, right? So this is the way you're going to be vary that amount. So very important, if you not agreed with the ATO's PAYG installment amount, what is in the best as per the previous year, you can calculate your this year tax and vary that amount. However, the variation should not exceed actual liability more than 15%. End of the year, when you lodge the tax return, your estimate should be maximum variation will be 15%, right? If you're using the option 2, you can change that your rate. The rate how is calculated, your last year PAYG installment income rate T2. You can vary it and the T3 based on the current circumstances and calculate that new one, right? So that will go to again T11. So whatever reason that there will be a reason code, you can see T4. I will come back in a second. PAYG. It's a reason code available. You don't need to write everything to ATO. So you can say this is the reason code. ATO can understand, right? I'm going to give you the PAYG reason code. All right, I'm going to share with you guys in a second. I think you can see the PAYG's code. You can see. So if you put the 21, the tax office understand one of this reason, right? Change in the investment. Or if you go to that here, you can see 23 significant changes trading conditions because of whatever reason. So these are the reason you are deducting. For example, COVID, you can say legislative changes or market changes, right? Like that. You are going to include that reason code in the bottom of the T4. You see T4. If they put the 22, they can understand one of this reason you are changing this one, right? So that's called recent code. So now we will move into all right. So I said that how you're going to what is in the PAYG installment income, you're going to exclude all the income you're going to include that these are the income should not be part of the PAYG installment. You can see GST tax is not part of that, salary is not part of that, franking credit not part of that. Normal sales income and in all the ordinary income you earn from your business and investment should be included as an investment income. Rest of these taxes and other stuff not part of the installment income. So installment income times the rate going to be installment amount. A little bit confused, but that's the way it's that best we are reporting. Your PAYG installment income multiple by installment rate, you will get it installment amount. Installment amount will be tax advance, right? So I will put it that some example how you're going to change the variation as I explained previously. So you're going to, if you want to change the estimate, you're going to calculate the estimated total, your uh, estimated tax, and work it out based on that how much you paid already. So that's finish of this one. anything that's as I explained, this column very clearly explained, so you can change that in that variation amount using that your estimated tax payable, and you can change that variation rate calculating your estimated tax payable, and get the new rate and calculate. There will be a variation code in the bottom. You can see when you click, I explain clearly where we are going to include. Now we are going to finish this one, start that other one called friendship benefit. Now we move into that friendship benefit and other small taxes. Um, All right, friendship benefit. Friendship benefit tax paid by employers, right? Who's going to pay this tax? By employers. Why they are paying? Certain benefits they provide to that employee or employees, family or their associates, right? Whenever you provide that any benefit to that employees, to or employees, family or their associates, right? You cannot just escape, give it that my benefit to my wife or partner. So how is that work? Any benefits provided to employees outside of PAYG withholding tax system, what we learned previously, normally fall under friendship benefits. Right? If you provide salary and wages and commission, normally you are withholding the tax from that employee under the PAYG system. Therefore, that's not the friendship benefit. But if you're giving a private car for private use, right? So you're giving a company car to that your employee, that's not come under the PAYG withholding system. Therefore, that should fall under friendship benefits. Friendship benefit is a separate assessment. So we are going to lodge that friendship benefit tax returns, every year. However, that not with the income tax return. That's a separate lodgement. You will be given some more information later if you are lodging that particular tax returns. The normal rule, that's the fringe benefit year, start from 1st of April to 31st of March. Income tax year, 1st of July to 30th of June. So this is different legislation, different reporting system, and different reporting year as well. So you can see 1st of April to 31st of March. If you were required to pay $3,000, the previous year, if you paid $3,000 friendship benefit tax, you must pay that. You are going to report through your BAS in the future BASs, right? For example, if your total friendship benefit tax $10,000 last year, tax office start to ask you to pay in advance through the BAS, right? So the friendship benefit tax is a separate tax return, same as PAYG installment, right? You're reporting through the BAS and preparing the income tax return later, right? Here, you are paying your friendship benefit tax liability in advance and prepare your friendship benefit tax returns end of the 30th of March, right? So employees can generally claim the income tax deduction for friendship benefit amount and tax component. Both can be claimable, right? Type of friendship benefit, car friendship benefit. Car friendship benefit mean employer provide a car for employee for private use. If they provide the car for the business use, that's not the friendship benefit because that's a business related travel. But if you provide that friendship benefit for private use, that's going to be a for friendship benefit. Employer provide a free car parking. For in the city, you can see reserved, reserved, reserved. So when they provide in the employee reserved car parking or normal car parking, that will be come under friendship benefit. Entertainment related friendship benefit. Your employer provide your gym membership. That's going to be entertainment or club membership. Expense payment friendship benefit. Your employer paid your holiday ticket. You go to Bali or other country, that's paid by employer. That's called payment friendship benefit. Debt waiver friendship benefit. You get it some loan from employer a couple of years before. Now employer come back and say, hey, you no need to pay this loan. That's called debt waiver fringe benefits. Mean employer waived off your loan. So you are free, no need to pay that loan component. That's going to be your fringe benefit. Loan fringe benefit different from debt waiver. The loan fringe benefit mean employer provide interest-free loan. So you will be benefited from interest-free. That's your benefit. That's going to be interest-free loan benefit. Housing benefits, sometimes employer provide you a free accommodation, residential accommodation or hotel accommodation. Both will be come under fringe benefit. But for traveling for work related and staying in a hotel, that's not going to be fringe benefit because that's a business travel, right? Housing fringe benefit. Board fringe benefit. Sometime employer provide you food and meal and accommodation as well. That's come under food and fringe benefit. Living away from home allowance. Sometime employees traveling and staying long term. That employer pay that their allowances for that. That will fall under living away fringe benefits. Property fringe benefits. If employer provide any property, for example, laptop or necklace or whatever property, that's going to be property fringe benefits. Anything not fall under this above category, still if the employer provide anything to employee outside of PAYG withholding system, fall under residual fringe benefit. So all these fringe benefits are taxable. Who is going to pay the tax? Employer paying to the tax. Employee will not going to pay the tax. So, so how they going to reduce? But the way they can reduce that fringe benefit tax, one, they can provide in the benefit that are income tax deductible. For example, if they're providing a fringe benefit for a laptop, they no need to pay that fringe benefit tax because that's a tax deductible item for an accountant, right? So anything tax deductible item, if they provide it, employer not required to pay the fringe benefit tax. Or they can ask the employee payback. For example, you are staying in a residential recommendation $425 per month, per week. You can ask $50 you want to pay back. So your fringe benefit amount will be reduced 425 minus $50 because employee contribution is $50. Providing cash bonuses rather than fringe benefit, that's come under the PAYG withholding system. Providing benefits that are exempt from the FBT. Some of that benefits are exempted from the FBT. We will see what are the items, right? FBT exemptions. So it's mean when the employer provide to that employee, some these benefits are not come under the tax system, foreign benefit tax system. Number one, work-related items, as I said. So if employer provide fringe benefit for work-related items, that's going to be exempted from the fringe benefit. For example, for an accountant, a laptop, right? So fringe benefit, if it's provided, it's not necessary. Minor benefits, that normal total benefit not exceed $300 notational taxable value, right? If they're not taking more than $300, that's going to be considered as a minor benefits. You no need to pay the fringe benefit, each employee, right? Taxi travels are exempted from the fringe benefit. If you provide any taxi fees, fare, that will be not the fringe benefit. Concessional employers. Some employers are no need to pay fringe benefit tax up to certain amount. So they call, most of them call public benevolent institutions such as aged care, hospitals, non-profit organizations, fire service, ambulance service, that type of institutions, tax office exempted up to certain amount they can give to their employees as a fringe benefit exemption. So for this is the reason you can see most of the employees, they have a salary sacrifice with the age care. Why? The first 30,000 cross up amount will be tax exempted, fringe benefit tax exempted. So employer not required to pay. I will cover this matter with a salary sacrifice. Small businesses normally exempted from the car parking. So I will just put some link. You can read it when you have a time. Living away from the home allowance, also some exemption available. You can read it. Emergency assistance. When you provide some emergency assistance to your employees, that additional benefit can be exempted from the French benefit. Natural disaster, accident, or serial illness or armed conflict, this type of area, we can exempted from the French benefits. So when employer provide this benefit to employees, that will be exempted, right? Now, how are we going to calculate the French benefit tax? French benefit tax equal to, friend, the taxable value of the French benefit times cross-off factor times FBT rate. So French benefit tax equal to taxable value of the French benefit times cross-off factor times FBT rate. So what is the taxable value of the French benefit? What is the actual benefit employee gain from that benefits? For an example, so I have a holiday ticket, $1,400. Employer paid the $1,400. That $1,400 going to be my employees taxable value of the French benefit. For example, employer pay my my kids tuition fees, $1,000. That $1,000 will be taxable value of the French benefit, right? Estimated private benefit for the employee. Calculation method varies depend on the benefits. I will talk down the track. The cross-off factor. What is the cross-off factor? So the first one, taxable value of the French benefit, you know that. Now cross-off factor, there are two type of factors. Type 1 factor, type 2 factor. So if that employer provide the benefit to employees, if employer can claim the GST on that particular benefit, that's called Kaya cross-off rate. It's mean you are going to multiply by 2.0802 for the cross-off factor. If employer provide that a benefit to employee, the GST credit is not available to employer, that's called lower factor, 1.8868. 1.8868. 1.8868. So lower factor or higher factor depend on that product is GST credit available or not. For an example, if employer provide you a car GST credit available, type 1 factor. Employer provide you a international holiday flight ticket, no GST, therefore type 2 factor. Employer provide your children's education, type 2 factor, because no school fees, no GST. Employer provide to you a a laptop, right? So that no, you can say that's exempted. Employer provide you a diamond necklace, GST applicable. So therefore, diamond type 1 factor. So understand cross-off factor. And last part of the equation, you can see FPT rate. So you know said what is the taxable value, you know said what is the cross-off factor, you know what is the FPT rate is always 47%. So very clear. So we can calculate now French benefit tax. FPT rate always 47% at this stage. Reportable French benefit. When you prepare your payment summary, you are going to report a reportable French benefit. It is nothing involved with that French benefit tax calculation. That's we reporting to that in our payment summary to calculate Medicare levy, Medicare surcharge, and etc. So this is no matter you have GST credit available or not available, always 1.8868. If somebody asks you what is the reportable French benefit, or when you work in the payroll section, if you want to report reportable French benefit, you can ignore that GST credit available or not. Always you are going to multiple by lower factor. But to calculate the French benefit tax, yes, you must know type 1 or type 2 factor. But When you calculate that French benefit, reportable French benefit, always lower factor. Reportable French benefit, not French benefit tax. That's a other terminology we use that to calculate that our medical levy surcharge. When we calculate the French benefit tax, we must use the cross of type 1 or type 2 factor. But to calculate the reportable French benefits, it's not required to anything. Only you're going to multiple by 1.8868. So we will see some example. $1,500 car benefit. How much a French benefit tax? 1,500 times type 2 factor times 47. You can see $1,500 benefit you give it to employee. How much you are going to pay the tax to ATO? 1,467. Very expensive. So how much the total cost? $2,967. So how much we can deduct that business from your business income? Total cost will be can deductible from your income tax. So you can deduct $2,967 as a deduction from your income tax. However, your cost will be that much. Free residential rental accommodation, $425 a week. Type 1 or type 2 factor? Type 2, because residential rental, there's no GST. So 425 times 52, 1.8868, type 2, 47, that much. Interest-free loan, $10,000. So we got that interest-free loan from our employer, $10,000. 10,000 we want to pay back. That's not going to be our benefit, because one day we are going to pay back the $10,000. Only the benefit to employees interest free. Now we don't know what is the interest percentage, right? The interest percentage will be determined by ATO. That's called statutory or interest rate or benchmark interest rate every year. At this year, they say 5.37 percentage. So $10,000 loan, you got it. How much you benefit as per ATO? 5.37 percentage of 10,000, which is 10,000 times 5.7. Interest is no GST, so type 2 factor. So 47 percentage, $476 tax component. Assume that your employer charge 3% interest loan. So how much your benefit? 3% interest you are paying. So the benefit will be 2.37 percentage. That's the one you are getting the benefit as an employee from your employer. So employer required to pay the French benefit tax on 2.37 percentage of $10,000, right? $210. That's called interest differences. And free residential accommodation, $425. An employee contribute $50 back. So you are staying in a company quarters and paying only $50. But total accommodation actual rate is $425. You are in the concessional treatment. So actual benefit to you, $425 minus 50 times 52 weeks in a year, lower factor 1.8868, 47 percentage. So you will be benefited 30, 17,000. You are paid that employer going to pay the tax 17,293. International holiday flight ticket paid by employer 1,400. Very straight away. EST free. So 1,400, 1.8868, 47 percentage, 1,241. So you all know that how to calculate. There are two sections here. Um, I'm not going to cover car French benefit in this workshop. We maybe cover down the track when you started to work, because it's not necessary at this point for you to understand this one to prepare. I will move into French benefit tax. FET, how to complete your activity statements. So French benefit, anyhow, I just want to say to you, there are two methods we have in our car French benefits. One's called operating cost method, other one called statutory method. You can elect any one of the method, right? Base value, the statutory formula method, other one's called operating cost method. So which method you choose entirely up to you. But that's at this point, I not expect you to understand the French benefit calculator. You use that calculator which is available here, and you can calculate how much that actual French benefit. The manual calculation we will teach you later. So fringe benefit tax. So as I said, if you exceed $3,000 previous year, you required to pay. You required to report through the BAS. There are BAS section under the for fringe benefit. Tax office will be calculate and tell you how much you want to pay. That's very clearly here. F1 $10,000 and estimated. If you are not happy with the DTO's estimate as per the previous year, you can vary and using the FT, you calculate how much the total fringe benefit tax, and then you can vary the amount, same as what you did for PAYG installment. All right, and you move into that amount into the summary sections here, that's in the best. So you can see five, normally you are going to move into 6A FPT installment, but if you are going to any variation, if you want to climb back, 6B, I want to mention here, if you want to climb back anything overpaid for PAY installment, that should go to 5B. You can climb back from whatever you paid. All right. Now, fuel tax credit. This is the rebate from the ATO for businesses using the fuel for certain activities using their machinery or plant or equipment or heavy vehicle or light vehicle traveling off-road public roads or private roads. So the credit amounts depend on when you acquire the fuel, where your fuel is used, and the activity you used. So eligibility depend on the fuel and depend on the activities. So if you click that eligibility fuels, I will just go and share the screen with you guys. Can you see the fuel, eligible fuels? So there are diesel and petrol. Normally, that's the one you guys using. That's the eligible fuel. Now we will see what kind of business are activities are eligible for this. There are three type. Road transport mean in your truck or big buses and stuff. And that's very straightforward. You can click and see here. But all other businesses, it's very important. You can see they are listed every time. This will be updated, right? So you can see here, these are the businesses are currently eligible for fuel tax credits, right? So that one of the very important, interesting, any wholesale or retail or manufacturing or construction come under this category. Agriculture, fisheries and forestry and mining come under the nursing and medical services come under this category. So when we are using that fuel in these businesses, you can claim in addition to the road transport. So when we come back to that road transport for the heavy vehicles, right? When we come back to that, how we going to calculate, that's a very important. So I will go to that fuel tax calculator. Uh, so here, climbing, completing activity statement. Uh, 1 second. I think it will come up here. Right. If you click that fuel tax calculator, you can see you are going to say which BAS you're going to climb, and then you're going to select that what is that quarterly or monthly BAS, and then going to say when is the last day of the BAS, right? So you can see BAS period, start date. So it means this is the period. So we will go with the previous period if you will be more appropriate. You can see they have a two. Why is the two period? Because the fuel will be different price between these two area ATO is calculating. So now you can see you purchase that first period. So petrol and see you are in agriculture, you use that 1500 liter, not amount, right? This is a quantity, very important. So when you save and add, right? So we see the second period, you use the petrol for the agriculture, you'll be 1000, save, now all good, calculate. It will show you how much, you see, $1,661, it you're going to pay back to that your client. That's why it's in 7D. 7C mean if you overclimb previously, you can get back. So you go down and put that your business name here and print it out and keep this information for audit purpose in the future. So fuel tax credit is a very easy to calculate, and when you have when you do that calculation, print it out and keep it. So if you go to that your best form, there's a 7D section. In the summary section, you include in the summary section 7D and you will climb, right? So that's the fuel tax credits. So now we will move into, you can see here very clearly the labels. So then we will move into luxury car tax. Luxury car tax calculated with the simple formula: luxury car tax value minus luxury car threshold, 10 divided by 11 times 33 percentage. So a luxury car, so what is the two variable? You have luxury car value and luxury car threshold. Luxury car value will be the value including GST of the car before applying to the luxury car tax. For example, your car is $88,000 including GST. That's your luxury car value. Then only you're going to calculate the luxury car tax. So luxury car value, you mean what is the purchase price of the car excluding luxury car tax, right? Including GST. That's important. But when we come back to luxury car threshold, there are two threshold in the luxury car threshold. One, so a fuel efficient car 75,526 to 1920, and non-fuel efficient car 67,525. How you know that fuel efficient or non-fuel efficient? It is depend on the car, right? So you can see from the car manual or logbook. So that's a fuel efficient or non-fuel efficient. But the simple answer is, based on the Australian standard, if any car run for 7 liter more than 100 kilometer, that's going to be a fuel efficient car, right? So if it's a non-fuel, but we are not going to determine that one. You can see from the car manual or car logbook what is that a fuel efficient or non-fuel efficient. So if it's a non-fuel efficient car, your threshold will be 75,526. If your fuel efficient car, 67,525. So which cars come under the luxury car tax? Fewer than 9 passengers and fewer than less than 2 tons vehicles, right? So if anything more than 2 tons, like a truck or 4 ton or 3 ton trucks, it's not going to be luxury car tax. Or 9, 10 passengers minibus, not going to be come under this one. So the passenger vehicles, motor powered road vehicle that's designed to carry both of following: load less than 2 tons or less than 9 passengers. So Matt B Motor, so for an example here, you can see a car seller selling a car for $88,000 luxury car value. How much a luxury car tax? So not qualifying for fuel efficient. So his threshold will be 67,525. So 88,000 minus 67,525. Why we are using 67,525? Because very clearly say this car is non-qualifying as a fuel efficient. So 67 that threshold. If they say fuel efficient car, we're going to put 75,526. So the minus 1, 10 divided by 11, 33 percentage, which is 6,142.50. That's a total luxury car tax. So everybody clear with that? Luxury car tax. Now, wine equalization tax, normally a 29 percentage of the wholesale wine value. This is only for wine and wine product, and wholesale or import, they're required to pay 29 percentage. Please, very important, is generally only payable if you registered or required to register for GST. It means if your total turnover less than 75,000, if you're not registered for the GST, wine equalization tax not required to pay. The taxable value of the wholesale price is which wine is sold before GST applied, right? For example, $100, that $100 times 29 percentage, right? The GST will be before applying GST. What is the amount times 29 percentage? That's called wine equalization. We'll come back to the salary sacrifice, commonly referred as a salary sacrificing or total remuneration packaging. It is an agreement between employee and employer to for a better tax system for both of them, right? So salary, you are sacrificing your salary. So how that has happened? When you sign this agreement, for example, you are say I am salary sacrificing $20,000. That $20,000 you sacrificed, you have no access to that 20,000 after that. Can you write down in your notebook, for example, in your current salary $100,000 and you are paying $40,000 tax? So your current salary $100,000 and you are $100,000 and you are paying your total tax $40,000. So you sacrificing $20,000. Now your salary 80,000. You are paying say $30,000 tax, right? No, $35,000 tax, right? For an example. So how much you sacrificed? $20,000. How much you are paying less tax? 5,000 less. So your benefit is sacrificing $20,000 salary, you are paying $5,000 less tax. So this is the reason most of the salary sacrifice come up, right? So now we will see what happened to this $20,000, right? Because you don't want to lose $15,000 out of your pocket, right? So this $20,000 can be used the way you ask from your employer, right? So there are three different type we can use this one. Number one, common benefits. You can ask to pay my mortgage or pay my car loan or pay my Woolworth bill or pay my study loan or anything. That's called common benefits. Second one called exempt benefits. Employers are exempted from the fringe benefit. You remember we talk about that? So any income tax deductible item if they provided, no need to. So employer come under that concessional treatment like age care up to 30,000 or 17,000 or 5,000, different bracket is there. Or the last one is the superannuation. So that $20,000 you sacrifice to your employer, saying that I don't want as a salary, but you pay to this one, you can use it with the three different way: common benefits, exempt benefit, and superannuation. So now we will see what are the consequences for these three different type of benefits. If you go to the superannuation, so employer, you are 20,000. If that employer send you directly to the superannuation, employer not required to pay fringe benefit tax because this 20,000 you sacrifice, employer paying to you outside of PAYG withholding system. Therefore, he required to pay the fringe benefit. You remember how expensive for employer? So that amount. So if he provided to the superannuation, he no need to pay the fringe benefit tax. Why? Superannuations are exempted from the fringe benefits, right? So at this point, so if you are salary sacrifice and paid the superannuation, so that employer will be not going to pay any fringe benefit tax, you will be benefited with a $5,000 less tax. Second category, exempted fringe benefit. First category, common benefits. For example, you assume that you ask to the your employer to pay your mortgage, home mortgage. So home mortgage, if the employer paid that $20,000, that's going to be attract fringe benefit tax for that employer. Why? The 20,000 paid outside of the salaries and wages, outside of the PAYG withholding system. Therefore, that come under the fringe benefit. He required to pay the fringe benefit tax. Almost again 19,500 he's going to pay. 19,500 or very close to $20,000 he's going to pay as a tax. Therefore, employers not much happy with that to sign the agreement with the salary sacrifice with the common fringe benefits. Why? They want to pay the tax. So most of the employees will avoid to sign that fringe benefit, common fringe benefit, because they're required to pay the tax on that fringe benefit tax. Employee benefiting 5,000, but employer going to pay that 47 percentage times type 1 factor or type 2 factor fringe benefit tax. So therefore, very rare in that common benefits, but it's still available, right? Exempt benefits mean that the employer exempted from the French benefit tax. For an example, whatever item we learned, exempted French benefits in that couple of slides earlier in the French benefit section. If employer provide that benefits, he no need to pay the French benefit tax. Both will be benefited, right? Employer is nothing, but employee will be getting $5,000 benefits because he's not going to pay the tax on that. So exempted benefits are most that normally in practice in the real world. This is the reason you can see most of the employees work in the aged care and hospitals and non-profit organization and ambulance services. They have salary sacrifice. Why? They are up to cross up value up to $30,000. They are exempted from the French benefit that employer. So they can sign the salary sacrifice because employer not going to pay the tax. Employee will be paying less tax because of their salary sacrificed. If you pay into the super, normally French benefit not required, but you cannot have access that $20,000 until your age reach to the preservation age or your superannuation access age. So that's a negative part of the superannuation. So wherever the employer are exempted from the French benefit, they prefer to sign. The employee will be benefited from that deal, but common benefits are employee still benefited, but employer required to pay the tax. Superannuation, employee, yes, 20,000, $5,000 he's saving, but he cannot access that whole $20,000 until his retirement age. Excuse me. So that's called salary sacrifice. So then what the benefit, as I said, very clearly, superannuation. So there will be a reduction in the compulsory super contribution and etc. However, that rule is now changed. So it is when you go with the salary sacrifice, in your Medicare levy may be increased, maybe PAYG health payment may be increased. Your superannuation salary sacrifice when tax at 15%. Right? Employer reduce the superannuation. That will change now. There are different changes in the superannuation calculation if you go through the salary sacrifice. All right, so that's salary sacrifice. So we will see you in the next week with that with the more practical exercises. Thank you, everyone. See you next week. Bye.